Hi traders, it's Roberto. Welcome to another tutorial. This is part 2 of the Heiken Ashi strategy using a 1 hour and 4 hour chart. We're looking at a euro pound. Notice the market was in an uptrend. It's still in an uptrend. What's happening now, we're starting to see a correction. So how do I trade using a Heiken Ashi indicator with stochastics? The first thing I do is I need for a candle color change, and let me just make this a little bit bigger so you can see what I'm talking about. This candle here, notice we had several bullish candles and then a red candle was printed, and then I'd look at stochastics indicator, and this is very important. If you're going to take a trade, whether it's if you're finding support and you want to be buying, or you're seeing resistance and you want to sell, stochastics indicator has to be overbought or very close to overbought or oversold. So overbought conditions is around 80. The two lines need to cross to the downside when the market is finding support and turning around and heading north. Two lines on stochastics indicator must cross, and we need to have a color change on Heiken Ashi as well. So in this trade setup, notice that market turned around, the two lines have actually crossed on the 1 hour chart, and I would have taken my trade on the second candle right here. Now, you can tell the strength or weakness, or actually the strength of a market, if you see that there are no wicks or no shadows on the top of each candle as it's going down. The same thing when the market's in an uptrend. There are no shadows on the bottom. Notice how there's no shadows here. That's how you can tell the strength of a trade. Okay. Here, when you see how there's a little bit of wick on top of here, there's not a lot of strength to the downside here. And the market eventually turned around and went north. But here the market is so clear, just like what's happening at the moment. Notice that each candle that closes, there are no shadows on the top. That's how you know, using a Heiken Ashi candle, that the market is in a strong movement. Now, how long is it going to continue? We don't know, but we can calculate. For example, if this is a retracement, then we're looking for maybe a 61-50% retracement level. Stochastics indicator is heading south, and once it gets close to that 20 level, it probably will be oversold. So what do I do about an exit? Well, I would calculate using my Fibonacci tool. If this is the swing low of the day, this is the swing high of the following day, and I would look to get out at these levels. And what I would do is that I would switch over to a 15-minute chart and start looking for candle color change. Right now in the 15-minute chart, we don't see blue candles coming in the market, so we're still in a downtrend. And notice that the upper part of the candle is flat. That's how we know that the strength of this downtrend is very strong. As soon as we see the market change color, then we have to get out of the trade. So if we have a 15-minute chart that changes color, that's our signal to get out. But right now, there's no reason to get out of the trade. And right now in this trade, if you look at the chart, I'm up 20 pips. Actually got in a little bit late on this trade. And all these trades that you see on my account here are based on the same strategy. So let's look at another pair. Here's another trade that I took on pound Swiss. Notice again, we had a color change candle, Heiken Ashi. Stochastics indicator was oversold, and also we don't have any shadows or any wicks on the bottom of these candles. that indicates a strong movement, strong uptrend. Now, we were in a downtrend, and this, looking at this chart, this indicates a correction. Stochastics is very close to the 80 level, so I would start looking to exit this trade, and I would do that by looking at my 15-minute chart. As long as these candles are blue, there's no reasons to get out of the trade. So as soon as it starts turning red, then I would start exiting my position. But I can stay in this trade as long as these candles stay blue, as long as there's no shadows on the bottom. Okay, having no shadows on the bottom just indicates how strong this movement is to the upside. Here's another trade, Aussie, Euro Aussie. Here again we have no shadow on top of this candle, continues to turn around, head south. The market was in a clear uptrend. It's starting to retrace. Stochastics indicator overbought at 80. So the combination of a color change candle, stochastics overbought, or oversold, as here we had a color change candle, stochastics indicator is oversold. We take a trade and we exit this trade when we start seeing some weakness. We could have exited the trade around this level because we didn't know when this candle turned red that the market was going to find support and continue. And even then, if you took this trade, that was about 157 pip run. And again, remember, as long as these shadows do not appear on top. Here, we had a couple of shadows, so there wasn't that much strength, but stochastics was overbought, and I would have taken this trade anyway because the colors went from blue to red. But now we have a strong downtrend because we have no shadows on top. The market continues to sell off. Now, where would we exit our trade? Well, again, I would draw a fib from the swing low to the swing high. And we have 23, 38, 50, 61% retracement level. And I would start looking at color change candles at these levels of support. I would switch over to the 15-minute chart, and once I see a color change candle on a 15, then I would probably exit that trade. Currently up about 25 pips on that trade. Now there's another strategy that it's not a different strategy, it's just more of a confirmation using Heiken Ashi stochastics indicator, is when the 1 hour and 4 hour chart line up. And let me give you a good example. This shaded area that you see, notice the price was a bit consolidating. It was going up. This is Australian yen. But then it was finding a resistance. It was just consolidating, and then it turned red. And this shaded area that you see is actually the 4 hour candle. So the 4 hour candle. You see the 4 hour candle? It turned red. It went from blue to red. Stochastics indicator was overbought. It was also respecting a previous resistance level. So we had many reasons why price would not continue to go north at 94. So having 1 hour and 4 hour chart Heiken Ashi candles mirror each other is very, very powerful because we've got two time frames that is telling us essentially the same thing, that the market is ready to retrace. Excuse me. These trades, using a 1 hour and 4 hour chart as confirmation, last so much longer. And on this trade setup, it went from 94 all the way down to 92.50, so about 150 pips, as opposed to just trading off the 1 hour chart. For example, here we see a color change candle, but We did not get confirmation until now, until this 4-hour candle started to print. So we would probably, if you want to use a 4-hour chart for confirmation, you would miss out on quite a bit of this trade. I mean, I would have taken the trade here, and if you would have waited for the 4-hour confirmation, you would have to wait here. Now the 4-hour chart is telling us we've got a 4-hour candle is printing blue, bullish candle, and stochastics is oversold. So now, yes, I would consider now staying in this trade longer because we have a confirmation. But before this candle printed, we didn't. We had this candle here that was not telling us that this was going to be a longer retracement until this candle printed. And this candle hasn't, it's only been open for about 2 hours, but it is blue. And stochastics is oversold. So this is a pretty good safe trade. So I will stay in this trade as long as the 1-hour chart stays blue. But as soon as it starts turning red, I would exit that trade, and notice that stochastics is still oversold on the 1-hour chart. But once it reaches this level at 80, then I would probably start looking to exit that trade. Especially that we were consolidating and the market took off south. This was a breakout trade, and now this is considered the retracement. It's not a reversal because we're technically still in a downtrend. But once it gets to these levels up here, this is notice the swing point here. This would be considered a strong resistance, and we should be getting out at these levels because we don't know if this area is going to be, market will break through these levels because we're in a downtrend. Now here's a trade that, well, it's not a trade, it's just that we're looking at the New Zealand dollar, and we notice that stochastics is overbought, but we don't have a color change candle, so we cannot take a trade. We have to wait and see if the market turns red, and then yes, then that would give us the signal. That would be our trigger to take a trade. New Zealand dollar is still in an uptrend, so we have a swing high all the way up here. So that would be the next logical area of resistance. And having price hitting a prior resistance level and being overbought is pretty good area to start looking for a selling opportunity. But we cannot take the trade until we get a color change candle. So I'll be waiting for the New Zealand dollar to find resistance or just turn color. There's also a fib level, swing high, swing low. Price is hitting 61% retracement level, but it's also printing above it, so we don't know if this is going to, when it's going to stall out. Most likely, if it can reach this level of 83.29, then yes, I will start looking to start selling because stochastics is overbought. Now, if we look at the 4-hour chart, stochastics is not overbought; it's still oversold. So this most likely has still a lot of room to move up. Ideally, stochastics indicator being overbought or oversold on the 1-hour and 4-hour chart are the best setups. And this setup was ideal to buy when this shaded area down here on stochastics is oversold on the 4-hour chart, and we have a color change candle right there. So this would have been the best place to take a trade because we had 1-hour, 4-hour chart lining up essentially on stochastics. All we needed was a color change candle. But the market is not finished retracing. It's sold off quite a bit. It broke a swing point. Here is the trend line, and if you extend this trend line, technically the market should stall out at these levels up here. This is a Tom DeMark trend line, And if price can reach this 83.15 level, then perhaps we may see the market turn around and head south. We're taking a look at the euro pound, and again notice that the market, this is a 15-minute chart, and this is the time frame that I would be looking at if I wanted to exit a trade if the colors change on Heiken Ashi. And if we have a solid 15-minute candle that turns blue, then I would exit this short. Stochastics is oversold on the 15-minute chart, but that doesn't really mean much unless stochastics on the 1-hour chart is oversold. So I'll monitor this trade closely on the 15-minute chart. If it has broken 23.38 50% retracement level, getting very close to 61% retracement level, and I will see and wait if the market stalls out at these levels, and I would exit that trade. So to review these trade setups using Heiken Ashi candles, stochastics indicator, I use a simple moving average of 14, 7, and 3. 1 hour and 4 hour charts. So if you see a 1 hour and 4 hour chart color change candle, that's an indication that the market will have a strong retracement or possibly a reversal. You want to make sure that stochastics indicator is oversold on the 1 hour and 4 hour chart. Those are the best setups, those are the best entries, but you're not going to have that all the time. Just having a color change candle on the 1 hour chart is sufficient enough to take a trade maybe for 20, 30, or 40, or 50 pips, depending on how far the market had gone in one direction, and then you can take that trade going in the opposite direction and look at it as a retracement. Don't look at it as a change, a reversal, because if, for example, on this trade we're looking at pound Swiss, the market has been on a downtrend, and now it's retracing, it's turning around and doing a deep correction. But if you look at the higher time frames, we're still in a downtrend. If you look here on the 4 hour chart, notice we have lower lows. Stochastics is oversold, but it's still a correction, and it's not, unless it can break this swing point here, technically the market is still in a downtrend, and this is just a correction. So I hope you enjoyed this tutorial. If you have any questions, you can email me, and have a good trading week, and have a good Christmas. It's coming up next week. The markets are going to probably be very volatile or just consolidating throughout before the Christmas and after the Christmas holidays.